Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Thursday, May 1st. Happy May. The month of April is over. And so with that being said, I did want to go over some monthly charts here, but there's also a lot of exciting stuff going on in the crypto space, so I'm looking forward to going over those charts too. But yeah, we're going to start with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday on Wednesday, April 30th at a price of $44.63, up 4.5% on the day. But it, had a pretty nice run there before, putting his big wick to the top side and closing lower. While it was green on the day relative to Tuesday's close, the candle did close red because we closed lower than where we opened, and we are currently trading below 42.70, which was the closing price on Tuesday, April 29th. I did have a limit buy place there, but I felt like this rally was going to be short-lived. And so we did start to pull back some, and I actually removed that dip buy order, but I do have one just to pick up one share just to get a little starter position at $42. And I actually typed that in as 42.0, 420. Having fun with the numbers. And, I suspect that will get filled today. And then I got another dip buy just for one at 40 because I think that what we're seeing here, big move to the upside, followed by a smaller move to the upside, followed by a very small move to the upside. And I think the next one, could be taking us up to around $54.60. This red line that I have marked here based on the highs from December 12th, right over here. And so I am just going to kind of wait and see what happens with this. But I do think it is important to note that from the lows over here, like just right around $42, where I have that limit order at. So right around here, 41.95 did go up just about 19% from those lows, almost 20%, not quite there. But yeah, I think that this just has a lot of potential to be, getting from 4195 up to here, 30%. So yeah, I think that there's a nice, easy, 10 to 20% swing here. I suspect it will move higher than that, but never going to be buying the absolute bottom, never going to be selling the absolute top. So I just think the UVIX is a really nice one to be swinging. And we can see that we did get a nice surge in volume here, but that was not enough to hold UVIX up. And the last time we actually saw volume that high was over here on April 16th when we closed at a price of 59.07, so notably higher than where we closed at here at 44.63, and currently trading in the pre-markets, as I had mentioned, below 42.70 at around 42.40, down about 5% there. And if we look over at the 10-minute time frame, we can see this massive rally into the open yesterday, beginning in the pre-market, and then we started to see lower highs coming in, lower lows, and we have just faded into the after hours, and now the pre-market hitting a low of 40.39. But then looking back over at the daily, I did mention this little increase in volume. And let's see, we got the MACD here, still red, still negative, but what do we see here? So yesterday on the 30th, we had, for the histogram, I think you might be able to see that number just in front of Ed. It's right over here. It does change when the cursor moves, but we can see that number for yesterday was negative 2.66, and the day before was negative 2.85. Rounding those numbers, but it did get less negative, so maybe we are starting to see this roll over just like we did over here, which was a great dip buying opportunity, but maybe we actually do go a little bit lower. Maybe that does get a little bit negative before the next rally up. And then looking over at the VIX, this is the market volatility index, did close yesterday at $24.70, kind of a reverse of where the UVIX closed on, let's see, the 29th. The VIX closed at 24.70 versus 42.70 from a couple days ago on the UVIX. But anyways, just fun with numbers. Did go up yesterday, over 2% here. But then again, look at this big wick to the upside. Rejection from nearly, getting to this red line here at 28.32. We hit a high of 28.17. And that red line does correspond with the highs that we hit back here on December 18th. So just a day off of what we saw the highs, the date that we saw the highs for the UVIX, which was December 19th. Did get a rejection from that level, and now we are trading below it. Got another rejection from it also, that light blue uptrend, which, may not be that notable, but it was some notable support over here more recently. It's, kind of hand wavy, but we did get a very clear rejection from that. So, I suspect this will be probably going lower. And let's see, we did hit a low of 23.76, and that's actually super odd because this orange line is at 23.76. Just making sure I don't have the 7 and 6 reversed or anything, but that is based on the high from over here, September 6th, hit a high of 23.76. So yeah, pretty crazy that the low was, to that level exactly. I did have an alert over here. Let's see, I believe at $24. That did go off. I am wondering if the VIX will be settling below 23.70, maybe coming down to $20 a share, maybe finding some support here at the 786, which is at 1791. That is based on over here. But maybe actually a better thing for us to do is do a Fibonacci retracement from the low over here to the high. I'm just going to make sure those levels are right. So that should be, let's see, 1697. So actually, I just want to move this over here. It's magnetized. So hopefully it did get to 1697. Yeah, perfect. 6013 is that high. And I don't want the 382. I want to get the 786 up there. And, we're trading below it now. So a little precarious. But that's just, an added level, another level that we're getting rejected from, as you can see there. So I do think that is, fairly important to be paying attention to, but also I think it's good to not get overwhelmed by the clutter here. I might leave this one here just because, it did add a little bit. I had mentioned it, and looking at the UVIX over here, I actually don't have it drawn over there. So not getting into too much clutter. But anyways, let's move on now to the SPY. This is the S&P 500 tracking ETF, which closed yesterday at $554.54. Having some fun with numbers there. The 54s being repeated. Maybe that's a good omen. But it did go up just a tiny bit, 0.04% on the day, or 22 cents, effectively being flat. And the SPY has really, just kind of been having flat days, not really too exciting. But it is up about 1.28% in the pre-market, up above 560, currently trading at around 561.63. If we do flip over to that 10-minute time frame, we can see that it is very nearly getting to that gap fill at $564.52, hitting a high in the pre-market of $562.05. We will have to see where this takes us. But yeah, this does look like it's kind of consolidating up here, holding above both of these lines, that orange uptrend going back to, I believe, April 19th and August 5th here, those two pivot points. And then also, let's see, this 1618 is the Fibonacci retracement from here, 1618. So it's like an extension, but really it's not an extension because it's just a retracement from this low up to here, retracing to that low, and then going, 61.8% further. Brings us to, let's see, right around 550. And so, yeah, we have been trading around there. I suspect we will get a gap fill up here at 564.52, because if we do look over, and I'm actually going to remove the drawings for this, we do look over at the monthly time frame. Look at that. I mean, it was red for the month of April, but look at that massive wick to the downside. Buyers stepping in here. Look at that volume. Let's see. So for the month of March, we came down 5.57%, closing the month at $559.39. And then over the month of April, we came down 0.87%, or a little less than $5, closing the month at $554.54. Again, maybe a good omen. I have no idea. If the devil was 6, then God is 7, but man is 5. And so there are lots of 5s up there, and then maybe the 4s are for animals. I don't know. But dip buying opportunity here. I kind of feel like maybe, because look at over here. This is the candle for the month of March 2020. Look at that massive dip down to 203.60. Close that month at $240.43, but a pretty red candle there, a pretty big candle there. And so, yeah, I mean, this just looks like, hey, maybe that was a really nice opportunity, but maybe this is also just, part of a bear market rally, and this is going to continue lower. I have no idea. What we can see on the monthly chart here, we do have higher highs in the stock price, and then we do have lower highs in the RSI. That's bearish divergence. We can also see that the MACD, had its first red month since going back to May of 2023. So, this was red over here. When it first flipped red, that was March 31st of 2022. And, we had more than a year of, going down here before starting to break to new highs. So this could be, maybe the start of a recession or talks of recession. But again, this seems like it was bought up. Yeah, so that's like, let's compare this, over here, big wick to the downside, buyers stepping in, looking at that volume. Whereas over here, you just saw a fade lower. So this seems to be, in my opinion, very different characteristic than what we saw over here, and seems much more similar to what we're seeing over here, although there was a massive surge in volume on that. But I suspect that there was a lot of panic selling there, and a lot of people that missed out on these rips to basically, 3x from 200 up to 600. So too bad. So, good not to panic, good to be chill. And so that's why, going over the levels here. And we're going to go over the SPX, which is the S&P 500 index. Again, maybe some good omens for the month, closing the month at $5,569.06, being up 0.15%, or $8.23 for the month. Don't see pre-market or after hours trading on this one, but basically, all the same levels as the SPY. Really, the only difference that I see is kind of this double top level here was actually retested, and it does correspond with the gap up here that has yet to be filled, right around $5,667 there. If we round that up so it's not 3 6s, because that's a bad omen. But let's look over here at what I want to do the monthly. I'm just going to remove the drawing just so we can kind of do a little overview. Yeah, so again, MACD did flip red, but that was bought up. Look at that. Look at that. So the month of March closed at $5,611.85. Closing a little bit below that for the month of April, but for March came down 5.75% versus April came down 0.76%. That seems like the dip was bought, and this is going to keep rallying, but it could just be a bear market rally. It just looks, again, very different than what we're seeing over here. This was just bleeding down, whereas this didn't bleed, it bounced. It bleed and bounced. just like what we saw in March of 2020. And yeah, I mean, maybe we could go back even further in time. It doesn't look like this. This was, 2007 was the high here at the end of 2007, and the low here was 2009. So this was, the financial crisis. And we can look back further in time. This was 1987, October, massive red candle there. This looks way worse than the candle that we're seeing currently for April, but that was, a dip buying opportunity. Even, that was the lowest lows that you could have gotten during that month before we got a nice rally, more than 100% recovery. And we could go back further in time if we want. But yeah, I mean, all of the dips historically, looking, back, going to 1958 is how far this goes back, apparently, this chart at least. And yeah, I think that what we've seen probably is, and actually maybe I want to bring up the drawings because maybe I see something here. And I might just do a little ray here from the low here to that. And look. That, I wasn't expecting this to look so nice. But look at that. We nearly got to it. And that also corresponds with this 1618 Fibonacci extension here from that. This is looking at the monthly, though, so maybe it's a little bit wonky if I do put it on the daily. Let's see, where are those pivot points? Got this one right here. And what's the other one? Just want to magnetize it to there. Sorry for the silence, just trying to get it to be right there on that pivot point. I'll lock that in place. I assume those are the exact right numbers, but it's possible they are not. But yeah, I mean, we got to dip to nearly those levels, so I'm feeling pretty good about things. So hopefully you guys are too. But talking about feeling good about things, let's look over at Bitcoin. Above $96,000. Pretty awesome. We did get kind of, a dip lower yesterday. I don't know if you guys were panicking. I unfortunately didn't buy the dip necessarily. I guess relative to current price, I did, but I didn't pinpoint the dip buy just because I have a timed daily buy, so I don't do it, at certain levels or anything. But it does look like it dipped to a low of $92,900, getting very close to this level that I have marked here, $92,609.40, just being approximate. And, that's really just based on the levels that we were testing over here as support. Seems like 93 is support again, but even if one would have had a limit dip buy placed at 93,000, I suspect it wouldn't have been filled just based on the spreads. Depends on the exchange that you use, whatnot. So, I think, just 94, whatever. I think that was a dip buying opportunity as, we are 96 right now. Hit a high so far of around 96,400. And the high over here that we saw on April 25th, the high was 95,900. So, we're getting up there. Might end the day, lower. Who knows? But I'm just feeling good about Bitcoin as always. And one thing that, I haven't been doing any of these pre-market preps, but I definitely will be going over during this Saturday's Crypto Corner. Just wanted to look at Bitcoin here on the monthly time frame. And so for the month of April, we can see that, pretty nice green candle here, up 14.11% for the month. This is data from Coinbase, I should note. This just seems like, upside move, bull flag consolidation, just like we saw over here, which was followed by an upside move. So just feeling good about this. It's all about time, though. Time in the market, not timing the market. This is on the 1 month time frame. And if we do take a step back, maybe I'll draw it up there. There's going to be some other stuff that pops up. But let's see, just looking at, the highs over here, just kind of getting from the, not the tippy top highs, just like the candle highs. I have not drawn this before, but what we can see is The highs from over here, this is, the highs from March, April, and May of 2021, and then the highs of October and November of 2021, just getting those, let's see, close, open, open basically, and then a close and open for the months, close and open for the month. So just, rolling over. We kind of saw that over the past few months here with February, March, and April, the lows effectively testing that uptrending level. And so it does seem like that's flipped to support. I will go over, I believe, these other purple lines here during Crypto Corner on Saturday. So make sure you tune into that if you're interested. But then just going to flip over to Ethereum now, which is trading above 1,800. And we did get a nice dip yesterday too. $1,732.31. I do think that Ethereum is going to be a great performer. I do have an alert here at 3,000, but in all honesty, I think this is very likely getting back to 4,000 by the end of the year. That's a more than 2x. I feel like that's a pretty safe bet, but I think this could actually be getting up to around 8,000. Again, will go over that, will be going over that in Saturday's Crypto Corner, and I did go over that in my ETHster video. So you'll have to make sure you check that out. And then because I'm talking about buying the dip and whatever, I did not do that with Ethereum, but I did do that with my other, favorite cryptocurrency, Dogecoin. And so my average, I believe, is around 17.4. And so we are above that now. But yesterday, we did get a dip down too. It looks like 16,679. I didn't dip by that low, but I did incrementally add between 17.4 down to, I believe, 17. I wish I would have been more aggressive with it, but at the same time, I want these to be going up. I do have a good amount of Doge. I don't necessarily need to be adding to it. So worst case scenario, it goes lower and I add more. That's a good thing. Best case scenario is it goes up, and I'm happy about that. So I don't care that it didn't go lower, and then I have more cash on the side to deploy elsewhere. So anyways, I'm just excited about Doge, and I hope you guys are too. But then let's now flip over to uranium. This is the Global X Uranium ETF, or ticker symbol URA, did close at $25 yesterday, down 0.52%. In the pre-market, it looks like it's up about 1.4%, trading around 25.36. Might be getting a rejection from around 26 before maybe finding that as support, or maybe we do pull back down to around, sub 24, maybe not all the way down to 23 before starting to go higher. But uranium, nuclear, I think that those are good things for the, energy security of the U.S. and beyond. I think that nuclear needs to be, part of everybody's energy portfolio, as long as they have the energy and or the engineering capacity and the geology to safely harbor and create nuclear energy from uranium. So I find this to be a very interesting play. And then speaking of energy, let's look over at BOIL. This is the 2x leveraged natural gas ETF, closed yesterday at 55.61, down about 0.6% on the day. Does look like maybe it could be putting in a bull flag here. Maybe it's going to be going higher, but I suspect it's actually going to be pulling back, going lower. I do have some alerts down here at, it looks like 40 and I believe 36, 37, and I was going to change it to 36.90 to have some fun with the 6.9 in there, but 37, I'm going to be disciplined, just leave it there. I got the 40 above it. Actually, since I got the 40 above it, let's have some fun with it. Let's make that 369. Okay, and really, we don't want to necessarily be basing TA on BOIL because it is not only an ETF, but a leveraged ETF on the commodity. So what I think is a better thing to do is actually be looking over at the commodity. But before I do that, one thing I should note is that we did see, this big surge in volume here. But then as it's been holding up here, I guess volume has been lower. But yeah, I mean, we need to see a surge in volume for that to continue up. Maybe we don't see that. But let's look over at natural gas over here. I find this to be pretty interesting. The 2024 forecasted average, which we spent the majority of the year below that, is at 350. And over the past couple days here, so on Tuesday the 29th, hit a high of 348. And then, so far today on May 1st, looks like the high was, 348.8, so getting very close to 350. So I'm kind of wondering if it might be getting rejected from there and, then heading lower. And, I would like to, let's see. I would like to see this come down to, around 278, and maybe if we get lucky down to 250, dip buying accumulating area down there. But this is called the Widowmaker for a reason. It could be very volatile. This could be breaking out, maybe getting up to around 380, double bottom here. That's going to be some notable resistance, just like it was over here. So I do think that this could go higher. So I have not entered into any sort of long or short position. I'm just going to wait for down here when I think it's gotten, oversold. Not hoping that it's going to continue higher because it's very tough to time natural gas. But anyways, with that being said, I hope that was helpful. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And I'll try to have a video out this evening, likely on AMC, because there's something I noticed in the chart that might be of interest. But yeah, anyways, have a nice day. Take care, you guys.